All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market is set to open up down about 5 points here this morning, 4.5 points if we include fair value there. So just a small gap lower. You can see S&P futures, still dancing around this 3,000 level. They danced around this level all day yesterday, and they pretty much have danced around this level all night. We did just see overnight futures hit a new low, about 10 minutes ago, but we're not talking about some severe movement here. So want to jump on. We're not in any trades here for the challenge right now. There have been no new signals. It's really dry out there signal wise. And with some of the chop to be expected, there are a few things that kind of expected to trigger that haven't. But the way things are shaping up, it'll be interesting. I'm not sure that we'll see a trigger here today or not. If we do, I will definitely go trade it. But if not, I will remain in cash. Challenge just over 10,000 here, and we're coming to the end of the challenge here on the 20th, and we'll start up a new challenge on the 26th. So as we kind of go into that, I'll admit I'm debating ending the challenge right here and moving up the next challenge start date. Just given what's going on and some of the chop and some of the dice that we see and some of the chop that I expect to see and maybe some of the lack of signals that I kind of expect to see in the next couple days. I would like to be, running when we see a lot of signals come in, and so I may move up that challenge start date just a bit, but we'll see how today plays out. I'll be talking with Jason and Michelle here today about that, so we'll kind of see, and if so, I'll announce that. But as far as the overall market goes and some different things, I just wanted to hop on, share a few thoughts. It's one where if we pull up the market internals are still bullish. Okay, they're still bullish, but if we look at the broader market and how things are trading, it's pretty choppy. It's got a little bit of trend here to it. We have seen most of those trends be on stocks that have come off bottoms. So if we look at like a Caterpillar, for instance, a stock that's come off a bottom, it's had a beautiful upward trend. Then if we go and we compare that to something like a Microsoft, it's had a beautiful sideways chop. And we continue to kind of see this differential out there where the more heavily shorted names or some of the more oversold names have seen money flows come in. Some of the best stocks out there, they have seen, money pretty much just chop in and out of them. And, we've seen a few upside signals on Microsoft, have not had any kind of follow through to them. And, eventually we will see it. We will see it. But the more we see it consolidate, the more risk of a short-term breakdown and then snap back higher. The more that risk exists. There's, as far as something to drive the markets further, to drive them on, there's not a lot. We don't have earnings. We don't have any real economic data. We don't have the Fed, for the most part right now. We don't have very much, right? It's very light here for the markets. But when we look at the metrics, things like the bullish percent index, despite a little pullback yesterday, still in a very bullish position. When we look at small caps, we're talking about something that's still in a very bullish position, albeit, yes, you could argue overbought. But it's one where we haven't seen the metrics turn down at all here in the market. It's one where we could, right? I was asked yesterday, okay, is this news event, is it going to cause a big downturn? This Iranian, Saudi, U.S. whole situation, is it going to cause a big downturn? It could, right? Yesterday it created a 0.31% sell-off in the market. That's what it was good for. So really wasn't good for much in terms of directionality, except for a few sectors, right? If you were short the travel industry, you were happy. If you were long the energy industry, you were happy. But outside of that, not a ton there with it. I would not be surprised to see some more chop around, some more dice around here in the market. If we do break yesterday's lows, that could be something that would drive some algorithm money out to see some sort of retest of this kind of breakout level that we saw right here in earlier this month. To see that level retested wouldn't be a big shocker there on the market. If we get one of those big, bad red candle days where the market's down 30, 40, 50 points, we're probably coming down to the 200-day moving average. And I think if you're looking for a big sell-off, that's what you want to see. You want to see that 30, 40, 50-point drop to say, okay, we're going to come the rest of the way on down, because that type of drop is the type that would do serious technical damage to many of the index charts, including many of the individual stock charts. And so, outside of getting that type of action, I think short sellers still have to be, fairly careful, fairly cautious here with things. But if you're looking for, hey, you know what, is good of an all clear signal for the bears, that's kind of what you're looking for here with that. Can you anticipate it? Sure, you can, right? I found myself yesterday pricing out some put spreads down here at the 200-day moving average again. I didn't pull the trigger. Priced out some call spreads. I didn't pull the trigger. Because I'm just not convinced that we're going to get that highly directional movement come on in here just yet. As we start to go in the weeks to come, we are going to see a lot of catalysts, right? There are going to be plenty of catalysts out there. We're going to start to get into earnings season, which, it traditionally is the biggest catalyst, right? It's not the biggest of headlines, but is the catalyst that ultimately drives things. And I'm very curious as we go into this earnings season, how stocks perform relative to analyst expectations, simply because I think one of the fears in the market has been that estimates for a lot of companies are going to have to start coming down as we go into next year. And do we start to see some of that happen this earnings season? We will see Adobe and FedEx report after the bell here today. So those are off-season earnings reports, but they're going to be some of the early look into Q3. I think they're both very important in terms of, okay, how do they react to what they say? Tomorrow we have a little bit of economic data, but nothing too serious there. But you can see the calendar up here. It's pretty light this week. As we get into next week, it's still fairly light. Right, just not a lot here for the market to dig its teeth into. We'll have Nike report earnings, and we'll have KB Home earnings, and I think Micron next Thursday. Will be reporting earnings, but then we'll get the first of the month economic data starting October, and then into earnings season, kind of the middle of October here. Where we'll really start to get into that earnings season, which will correspond to the U.S.-China talks and all of that, how that plays out. We'll also have a lot more Fed speak. So, the markets are going to get bombarded with a lot of stuff in the coming weeks, but it's pretty quiet right now. And with that quiet, barring a major catalyst, it's going to be a little tougher to see the market stack on really big gains or really big losses. Again, barring a strong catalyst coming in here for it. Okay. Alrighty. I will be on. I won't jump on video this morning if there's not a signal. If there is a signal, I will jump on. I will trade it, but I will put a note into the message feed. Either way, if I'm gonna jump on or if I'm not. And so you'll be able to see that there, and then I'll jump on video again here with you this afternoon. Have yourselves a fantastic day, and we'll talk to you later. Take care.